If you're like most business owners, there comes a time in every business when a debt turns bad and it must be written off. Bad debts arise because items of stock or services are sold on what's called trade credit. This business agreement usually allows the customer to take possession of the goods or service for a period, normally 30 days net or 30 days for the end of month. So what defines a debt as being bad? Even though the terms of trade are normally 30 days, some people may push their luck and drag this out to 60 and sometimes even 90 days. Whilst this still is outside of the terms, it may be classified as doubtful, but usually not considered a bad debt. When a debt is over 90 days, however, and it seems highly improbable that you will never ever receive the payment, a debt may be classed as bad and in the worst cases may even need to be written off. Take our customer here, Slippery Joe. Back on the 16th of March, he purchased goods to the value of $592.90 and he has not yet made payment. The directors of the company have decided to cut their losses with Slippery Joe and write the debt off as being bad. So what needs to happen at the end of the day is we need to move the $592 balance, which we can see here in Slippery Joe's account, from Slippery Joe's trade debtors account here over to an expense write-off account in the profit and loss. We also need to make the necessary adjustment to claim back the GST that was remitted to the tax office back in the March BAS. In our system here, we have an account set up to handle bad debts. Account 5050 is classed bad debts. You can see here we've got it set up in the direct expenses part of our profit and loss in the chart of accounts. Now to move this balance from Slippery Joe's trade debtors account over into the bad debts expense account, we need to use what's known as the general journal to undertake this transaction. Let's post this journal now. We open up the general journal voucher here and we give it an appropriate name, such as write off bad debt for Slippery Joe. We can put any other notes that we want to put in here as well. We then must select the date that we want to write the debt off from. Now, if I post this today, we'll see this move from debtors over into the profit and loss in the June period. And that's what I might do with this, is leave it as of today's date, the 16th of June. I then come over here and I select the bad debts expense account. I tab across and I key in the amount that I want to write off to the bad debts. The amount we're going to post is $592.90. Now what's important here is that we only write off the net amount to the profit and loss and claim the GST back. If I bring up the calculator here, I can turn that into GST minus, close and paste it back into the journal, tab through and ensure the GST type is set to GST applicable. What that does is that it adds the $53.90 to my expense amount to give me a grand total of $592.90. I then must select the debtors control account and I need to credit the full amount of $592.90 against the trade debtors control account, leaving the GST type set to none, but I must here select Slippery Joe as the sub account that I want to post this amount to. What we now have is a balanced journal, $592 to the profit and loss expense account, plus the amount as a credit to Slippery Joe's account. Remembering in here That's $592 sitting as a debit in the trade debtor's control to Slippery Joe that we want to write off. We can then post this at today's date. If we return now to the debtor's master file and refresh the record, we can see here that we've now got $592 showing up as a journal amount to Slippery Joe's account here. We can see that now. So what we need to do is basically net this off against the appropriate invoice. So if I return in here and do a debtor's receipt to Slippery Joe, I make sure the amount is set to 0, and I can then tick off the credit and then the invoice to give myself a balance. Now what we're doing here is like we would do in a normal receipt situation, is we match the receipt to the invoice. In this case, we're matching the journal to the invoice to show that that journal relates to that invoice, and it's that journal that takes it off the screen there. Now I can simply make that cash because there's no money moving back and forward, and post that amount. Back here in the debtor's master file, a quick refresh there, and we can see in the balances tab that Slippery Joe no longer has a balance owing. What's more important though is we go to the options and we review Slippery Joe's trade terms, and we move him from being on an account onto cash terms to make sure he can't get anything else on trade credit again.